Thank you so much for tuning into this earnings conversation with Dr. Shah of Midhani. The numbers came out, and while the revenue numbers look rock solid, there was a sizable downtick in operational metrics, particularly the margins, which came in at 22% versus 28.73%, as a result of which the profit growth was up just 5% versus the revenue growth of 63%. Dr. Jha, good having you. Thanks so much for taking the time out. I would love to understand, sir, first, the revenue growth, 65% growth, is a solid performance. What went into this, and would you believe that such a performances can be replicated in the quarters to come?
Yeah, first of all, the revenue growth is on account of our new unit which has started working. So in that revenue, almost 30% contribution has come from our armor facility, which has started working in IMT Rohtak, Haryana. So, and in addition to that, in Hyderabad, that our main unit also, the requirement or the new additional equipments we have added, which includes our white plate mill and also a furnace of higher capacity for doing the primary melting. Both these equipments also have come into the operation now. So it was stabilized in the fourth quarter of last financial year. But from the first quarter now, these are working at their almost, I say, 80% of their capacity.
So do you expect that, I mean, I'm presuming that there will be enough orders to or execution that can happen if you need to take the utilization levels higher. So would you believe that this is the kind of contribution or better can happen in the quarters ahead?
Yeah, today I think because of the more and more requirements are coming up from even the export market also. And in last 6-7 months, we have done a lot of work towards certifying our material for international aerospace companies. So I am sure that inflow of the order will be added from that source also. And we are seeing the inflow. I think this quarter itself, we are starting with almost 35 crores of export order. And also we are seeing that possibility of getting another 100 plus crores of order is in the stage of negotiation. So and domestically also in the first quarter of FY24, this current financial year, we have already booked almost more than 500 crores worth of orders.
Got it.
So considering these indications and the possibilities, I think that order will not be the issue. But the challenge will be that how quickly we can execute, and that is also mainly because of the on the raw material which we have to get on time. And I think this will be the major challenges for the companies like us, where we are depending on the raw material coming from the overseas.
Okay. Are you sensing those challenges in the quarter two itself, or in the first whatever 40 odd days in quarter two? Is there a challenge for procuring raw materials?
Yeah, it has started from the last financial year itself. You see in the FY23 also, we have spent higher amount on the account of raw material, and which has continued in the first quarter of the current financial year also. And I am seeing that this may maybe get softened after some time as we start working, but it will be a situation where company has to make a cushion for that, so that any fluctuation or any break in the supply coming from the overseas, we have to compensate from our internal orders, the orders which can do from our internal resources.
Got it. Dr. Jha, one question. So is that the reason why margins have come off 600 basis points, actually 650 basis points? Why such a sharp dip? Do you hope to improve upon this?
Yeah, margin, as I have told only that the mainly because of the raw material, number one. And number two, also we have the higher finance cost because of this. And third component was that in this quarter, many our long pending orders we have completed, which has attracted the liquidated damage of 10% LD. So I think these three factors have resulted in this type of figures. But I think this is only a first quarter where normally our sales and all will be very less. As we progress, I think this can be compensated as our volumes will be increasing and we'll be doing the higher margin products also. So definitely the Midhani is having orders will have combination of high margin and low margin. So anytime we get balanced as we come to the closer to the financial year.
So what is the average that you expect for 2024, sir, on the margin front?
It will remain similar to whatever we achieved last year. Last year we have around 30 EBITDA to sales ratio was almost more than 35, around 35 uh, percent. So this time it was around 25. So I am sure that these things will be composite, will be reaching to similar to that level. Maybe 30 plus. It may not be 35, cannot be maybe 35, but 30 plus definitely will get there.
Got it, sir. Just one quick question. You had mentioned the last time in the interview with us that you would probably do exports of about 100 crores. I heard you say that you started with 35 crores worth of orders. You expect another 100 crore order. Execution, of course, is a different thing. But do you expect to live up to that 100 crore mark of export revenue in FY24, or could it exceed that?
Our target is to go beyond that 100 plus. We are targeting to 200 crores.
In FY24?
Yeah, our target is to reach to 200 crores.
Very
But definitely,
Mhm.
as we see the part of execution part and of course the raw material side, considering both the factors, will be landing somewhere around 100 plus or 150 around.
Okay, got it. So one question then, you targeting higher export revenue. You've started off Q1 FY24 with a bang on the revenue front. What is the kind of revenue growth that you are penciling in for FY24? Are you revising internal estimates upwards from what they were at the end of FY23?
Yeah, we are will be targeting not less than 20%.
So 20%
growth.
is a very reasonable number. Are you being conservative? You've
Yeah,
done
yeah,
65%.
I'll tell you that our internal estimates is on definitely will be on the higher side, which I cannot promise at this juncture here because it depends on that how we start progressing.
Got it.
But definitely our target is to cross 20%. Definitely, it will be higher if we are going. We are able to execute at the way we have started in the quarter one, the same tempo, whatever quarter one we have started, if it continues,
Mhm.
then reaching to 25 also will not be difficult for us.
Got it, sir. Okay. A couple of questions. I mean, there are multiple triggers. I mean, you played a pivotal role in Chandrayaan 3, the GE HAL deal. You had told me the last time that as of now, you've not seen anything, but you will probably hear about it maybe as time goes by later in the year. And of course, you've spoken about how, a bunch of orders are coming up as well. What is the most exciting thing that happened in quarter one? And what is it that you're looking forward to for the rest of the year?
Quarter one, I think on the order front, it was very good. I think the highest order booking we have done in quarter one in the history of Midhani, it has crossed more than 500 crores. We have order booking we have done, and quarter two also the indications are good. We are going to get the good orders. And on the front of our supply to the internet qualification to the international aerospace companies, which already I have told earlier also that GE Healthcare has already approved us. We have also now trying to see that Rolls-Royce, we have supplied a good amount of material already. They have started using, and I am sure with the type of our they have assessment what they have made, it is possible to get qualified with Rolls-Royce also in the coming months. And in addition to that, we are also trying to see that how we can align ourselves in the supply of the raw material for GE, aerospace, and the saffron. So both we are trying to see that those things you can enter in their supply chain, either in the domestic or in the international market. So on those fronts we are working. Pratt and Whitney already we have supplied some material and they have tested, they have found okay. We have also seen some material too. We have given to the Israelis companies. They have also are using our material. So it's good international front also our business is increasing. Today orders are available in the international market, but we are not able to execute all the orders because of the constraint on the raw material because their requirement is in very short delivery time is there. We are trying to build up our capacity accordingly, and we will be seeing that in the future. Definitely in these fronts, Midani will be doing very well.
Got it. Dr. Jha, we wish you all the best for the quarters ahead. Thanks for taking the time out and look forward to talking to you at the end of quarter 2 as well.
Thank you. Thank you.
Thank you so much. And viewers, thanks for tuning in to Midani's quarterly earnings. They talk about how margins will recover and the targets for exports have been increased from what they were at the start of the year.